My decision as an investor is to get involved now before it becomes regulated, because my long-term belief is that I don't consider Bitcoin to be a coin at all. Bitcoin is software. Solana software, Polygon software, Avalanche software. These are software projects. And in the long run, if you believe that this productivity, primarily aimed at financial services, that's what it really is, which is the largest sector globally, is going to bring value, then you have to think about crypto as being the 12th sector of the S&P one day, which is the way I look at it. And so when it does get regulated, and I'm talking primarily about the US market, there's going to be an inflow, a very large inflow of institutional capital into all of these assets. Now, you can't know with certainty who the winners are going to be, and that's why you need a diversified portfolio. So I've got a very large selection of different projects in my portfolio, about 32 of them. So different tokens, coins, equities of software companies like WonderFi, like BitBuy, like Coinberry, and to me, that's all the infrastructure. I mean, you've got to have compliant platforms if you're ever going to let this be something that the everyday person can use. And so today, in the announcement of an expansion of the number of users in the WonderFi platform with Coinberry, that's very important because it puts us in a premier position in Canada for customer acquisition, customer service, features, and all of the things we can do well as we do it on a compliant basis. You can go rogue, and that's a lot of fun, and you might make money. Or you can do it in a compliant way that fits within the banking system, which is what I would prefer, because I think longer term, there's more value there. So WonderFi, Coinberry, BitBuy, these are all compliant platforms, regulated, and we operate under an order from the government. So I consider that a much safer way to play ball, and in the long run, a great investment. Every day I'm trying to put capital to work. I'm an investor, so I'm always trying to find the path of least resistance to make good investments. And in the 2016-2017 timeframe when I made those comments, the regulator, particularly in the US and in Canada for that matter at that time, was extremely non-constructive, if that's the best way to say it. They really, really didn't want people like myself who are highly regulated, because I have so many investments in traditional financial services companies that were issuing securities and that kind of thing, that it was made clear to me by my own compliance department that this was not something I should do. And I made those comments in the light of how frustrating that was, because I always felt there was tremendous potential, but couldn't participate. And then all of a sudden we started to see the regulatory environment change. And all right, if the regulator's on board, I can go back to my compliance people and my auditors and say, look, I'd like to participate in this in a traditional way with diversification, many different positions. And it's been a very good outcome. And I think, yes, there's volatility, there's no question about it, but it doesn't mean that there isn't long-term value. It's a nascent industry, it's just starting out, and my path is to choose to work with regulators, to work with governments, to cooperate with them and build a business from the ground up, and I'm certainly an advocate for that, very entrepreneurial. And so when the market changes and the information changes, I change, because I'm, at the end of the day, an investor. This is a very important sector, and I'm very, very happy to be part of it, very proud to be part of it. Let's start with the investment premise. The reason you should own some Bitcoin, in my view, and I'm not telling people what to do, I'm telling you what I'm doing, is that I believe at some point Bitcoin will be regulated. And when that happens, it'll get an allocation in sovereign wealth and pension plans of maybe 0.5% to 1%, maybe up to 3%. That would be a traditional mandate. But if you're running a $100 billion mandate, which is a small sovereign fund, that's a lot of money. And so I would like to have a position in Bitcoin prior to that happening, because I think that's what's going to give it much more stability and price appreciation over time. No different than gold, digital asset, if you want to look at it that way. And everybody has their own opinion about what their weighting should be on Bitcoin, but that's my opinion. Now, the ESG issue, for most institutions who are not permitted to buy Bitcoin, the way they got exposure to the value of Bitcoin was to buy the shares of public miners. And there's some great companies out there. Hut 8 is one, Hive, Marathon, Riot, and many others. And so they're publicly trading, and you could just buy a basket of those shares, and you would see those stock prices they mirror the price of Bitcoin. If Bitcoin doubles, the stock price doubles, et cetera, goes down, they go down. That's no longer an option for institutions. And I sold my shares in all those companies, not because they're not great companies, just that I don't want to be involved in the debate around carbon offset audits. The attack by the European Union on proof of work 3 weeks ago, they were trying to ban Bitcoin mining with that edict. It failed. And because there's a lot of innovation that happens in Bitcoin mining, it's a lot of development of better technologies, better computing power, less use of energy, more development of hydro turbines. All of that's coming. That's all good. And that's why the European Union struck that down. But that shows you the risk here. Even the POTUS order talked about climate change, and that was a direct swipe at Bitcoin mining done the traditional way. So all of that's going to change, and I think that's a good thing. There was 1,500 institutions participating, and they own zero crypto, nothing. Now, for them to take the time to fly in from all over the world to listen to speakers talk about this means they're very interested, and they anticipate that policy is coming. And I would also argue that there was a lot of that signal there. For example, Senator Cynthia Lummis, who put forward a 600-page bill, was the keynote on the Friday to the Bitcoin 2022 conference. And she talked about how she is pushing for policy on crypto. In addition to that, we saw the Toomey and the Haggerty bills that specifically talk about stable coins. That's another group of initiatives. So all of this policy is coming all at the same time, which signals to institutions that it's time to start understanding this asset class. But I think what will happen first is, if we're going to get policy, it's probably going to be around something very conservative, like a stable coin, like a USDC or another stable coin, which would allow institutions to use it and stake it or lend it and try and get a 4 or 5% interest rate on it, which they can't do with cash right now. And as a payment system, it's far superior to anything else out there, much faster, more transparent, certainly auditable through the chain. And so a lot of good things happening there. But again, it's all policy and it's all software innovation, and it'll come at the pace it comes. But I'm making investments across all of these places.